Happy new month, guys. The year is running really fast. Okay, we are entering into Q2 already. Um, so this is the outlook video for the first week of April, 3rd to 7th. This is my expectation. Not much has changed from my review last week. Let me go to the daily time frame. So I posted this to the is it this? Yeah, so I posted this last week. This was my expectation for last week, right? Not just last week, like this is what I'm anticipating on DXY going forward. Okay, so not much. I explained this in detail from last week's outlook video. Is still on this channel, so you can just check the last outlook video prior to this one, right? Where I explained in detail my expectation for DXY, and we also looked at the COT report. The primary reason why I have been bullish on DXY is because of the COT report. Okay, now, so I'm still anticipating a return into this volume imbalance in short, so that hasn't changed. So let me hide this and this as the drawn liquidity for this month. So this volume imbalance being my drawn liquidity for this month. So I'm anticipating some kind of market maker buy model to take out this high. Okay, now I also explained last week that most of the time, not all the time, but most of the time, towards the end of the month and the beginning of the month, we tend to see some kind of consolidation and then manipulation opposite to the direction for intended direction for that month, and then the market will then rally continue to the upside for the rest of the month. Okay, as we saw that happen here, we see consolidation in February. First week in February, we see manipulation, then the expansion to the downside for the rest of January. Okay, this is January, not February, January. And then towards the end of January as well, we had this consolidation, and then we had this manipulation in the first week of February. Manipulation, then expansion to the upside for the rest of the month. Okay, and also at the end of February, we had this consolidation. This is manipulation, and then we have expansion to the downside for the rest of March. Okay, so first week in March, we tend to the first week of the month is typically when we tend to see that manipulation. Okay, to consolidate towards the end of the previous month and the first part of the new month. Then in the first week of the new month, we see manipulation to trip people off, and then the market then rallies up for the rest of the month. The same thing we saw here: accumulation, manipulation, expansion, accumulation, manipulation, expansion, accumulation, manipulation, expansion. And we are seeing this consolidation here again this month. I mentioned last week that most likely not drop into this area until this week. Okay, if you watch the last week video, I mentioned that will likely consolidate for the whole of the week, and that was why I didn't even really bother to even look at the market at all the whole of last week. Okay, because I was anticipating that the market is probably going to consolidate. So we have consolidation. So I'm looking, we have relative equal lows here. So I'm looking for manipulation, drop lower, and then rally up for the rest of the week, for the rest of the month. Okay, now there is no guarantee that that is going to happen. Okay, the fact that it had been happening every month of this year doesn't necessarily mean that that is going to be the case. Okay, it doesn't. Okay, we had same thing here: manipulation, accumulation. Accumulation, manipulation. So it doesn't have to happen all the time. Okay, Same thing here. Here there was manipulation below the bodies of the candle and then expansion to the upside. Likewise here, manipulation didn't really take out the high. Okay, we saw the manipulation, but it didn't really take out the high. They left the equal high. Okay, and that's why I'm bullish long term on DXY. Okay, aside from even the technical analysis and what the COT report is suggesting, the environment we are in right now, we still have the possibility of world war, right? It's still a possibility. I don't like to dabble into topics like this, but in situations like this, if things get out of hand and it escalates, it is gonna tell on the market. Okay, the market would definitely react to it, and the implication is that DXY would rally while risk assets would drop. Okay, so DXY, the dollar, generally is seen as a safe haven. They tend to like, in periods of uncertainty, they tend to like run to DXY. Investors tend to run to DXY as a safe haven. Okay, so a lot of can things can get really bad from here. That's what I'm trying to say. A lot of things, the war, the possibility of a war, global recession, um, and a lot of other things. Okay, things can get really, really bad. That's what I'm trying to say, and the market would react to it. Okay, and the implication, like I've said, is DXY up, risk assets down, right? And okay, we have this relative equal high. So that's why I think that the direction of this year is likely going to be to the upside. Okay, because I see this as consolidation, initial consolidation, run to a level of support, smart money reversal, low risk buy. So I want to assume that this is a low risk buy inside a daily fair value gap, weekly fair value gap. Okay, and then we rally up for the most of the year to take out this high. Okay, so that's my long term expectation on DXY. That is why when all the short trade that I took this year, I didn't close all of them. I left like 10% position on, which eventually got stopped down. So that's my reasoning for holding those trades. Okay. So that's that on DXY. Not much. If you go to the 15-minute time frame, we have a market maker sell profile already going on that started last week. Initial consolidation, run to support, smart money reversal, low risk buy, then offset distribution above this high. And this is also a market maker sell profile. This is a buy profile, this is a sell profile. Initial consolidation last Friday, run to an area of resistance, that's weekly fair value gap, and then smart money reversal where we broke below this low, low risk sell. Now I'm looking to see if we would get a run back into this area, then we drop lower to attack the volume imbalance. Okay, so for me, I am only interested when price drops into this area. I'm not interested in anything until DXY drops into this daily volume imbalance. Okay, if we go to the daily time frame, let me go back to the daily time frame just so you can see the volume imbalance clearly. So if you go to the daily time frame, this is the volume imbalance. The mean threshold of this OB is just below the volume imbalance. Okay, so not much has changed from my outlook video of last week. So this is my focus here. Okay, like I said, there is no guarantee that if price drops into the volume imbalance, it must reverse. Okay, but that is a narrative that I'm building. That if we get a drop into this volume imbalance, we get a reversal, and then we'll likely continue to the upside for the rest of the month. with this volume imbalance here being my draw on liquidity. That is my plan. Okay, and I will just keep adding to my trades, adding to my short on EUGU if that scenario plays out. Now, if we get a daily close below this volume imbalance, then it is likely going to run this low, the liquidity below this low. Okay, so that is my expectation for DXY. Let's check the COT report for this week. I haven't even checked. So let me pull up my browser. Okay, interesting. Look at DXY. Look at DXY. This green 52-week high, what it means is that that is the highest amount of long positions they have ever had on in the last 1 year. Okay, just like BTC, at this point, this is the highest amount of long positions they have ever had on in the last 1 year. This is the highest amount of long positions they have ever had on in the last 1 year. And so, but the red here means that that is the highest amount of short positions they have ever had on in the last 1 year as at this area. Okay, so we see that they are now heavy long on, even though it is net short. Okay, this is a net short position, but this, don't be deceived by this position. Okay, you want to look at the average change in their position in the last 1 year. So we see that in the last 1 year, their this is the highest amount of longs they have ever had on. Okay, and if you look at the highest amount of shorts they've ever had on in the last 1 year, we see that this is closer, this value is closer to this value. Okay, of course, this just changed here anyways. But if you look at British pound as well, we see that all through the rally, they have been adding more to their shorts. Okay, this is it. When the value is positive, if they add to their longs, the value is going to increase. Okay, if the value is negative and they add to their longs, the value will decrease. So we know from here that all through this rally, they've removed about 13,000 contracts from their long position. Okay, on EuroFX, we see that also from here to here, they have added about 5,000 contracts of longs. So there haven't been that much of a significant change on euro, but we see from here a few weeks back that the highest amount of short position they've ever had on in the last 1 year happened in February 21. Okay, and since February 21, we haven't really seen that much of a decline like that. We haven't really seen that much of a decline. Okay, so we can see from the CO2 report that they are also net long on British pound and they are net short on euro. So that is an SMT divergence. Okay, I never really saw it in this light until somebody mentioned it in the comment section of the video I made last week, and that makes a lot of sense. Okay, if you understand SMT divergence, that is a crack in correlation. We know that British pound and euro, they are positively correlated. So if smart money is short on British pound, they should be short on euro. Okay, that is generally what you want to see, right? But when there is a crack in correlation, maybe because they tend to hedge their positions. Okay, they are large hedgers. They hedge their positions to protect them against market fluctuation. So when they are heavy shorts, okay, we know that they are going to be heavy shorts at market tops and heavy longs at market bottoms. Okay, so that's the general characteristics of the commercials. Okay, so they tend to like hedge their position. So if we look at so like I said, if you look at British pound and euro, we see that there is an SMT divergence. Okay, so they are net short on euro while they are net long on British pound. Okay, so there is a crack in correlation. That means they are anticipating something is going to happen. They're anticipating that the market is they're anticipating that the market is there's going to be a reversal potentially. Okay, but when it's going to happen, we don't know. Okay, that's the thing. We don't really know when exactly the reversal is going to happen. So let me go back to. I hope that is clear. I hope that makes sense. Let me go back to the chart. Let's go to euro. So all through this rally, if they are net short, that means we are anticipating the possibility of a reversal here. Okay, we have this relative equal high here. Let me go to the daily time frame. So we have this relative equal highs here. So if we should so I'm anticipating a rally into it. Last week I was looking for shorts around here. Okay, I was looking for shorts, but because DXY was yet to drop into the volume imbalance, that was why I didn't bother. Okay, my only concern with euro is that price has closed above this fair value gap. Okay, so it is likely now going to drop down. It has already dropped down. Use it as support to run this high. So I'm looking at something like this, and then perhaps a reversal from there into this volume imbalance first, and then potentially this low if it continues its downside. Okay, so that's you have relative equal lows here as well. So this is my expectation going forward on euro based on my explanation on DXY. So that's pretty straightforward. Let me go to the 1 hour. On the 1 hour as well, we have these relative equal highs as well. So that's the easy draw on liquidity. That's an easy draw on liquidity. Okay, but I'm not interested in longs. Okay, I'm not interested in longs because it's going to be shorter. I'm more interested in trades I can hold for a longer period of time because I have been extremely busy, extremely busy with the EA that I'm developing. Programming takes an insane amount of time and requires a lot of focus. So most times when the market is moving, when I'm working on the EA, when I'm coding, it's difficult to keep a tab on the market. So I'm more confident taking a trade that okay, I know I can hold for a longer period of time. At least I just need to use a stop loss that is a little bit wider than usual. Okay, maybe like 25 pips, 30 pips that I know I can hold. Okay, I know that the target is still farther away, right? At least from here, if I'm able to, this is the volume imbalance I drew your attention to on the daily. So at least if I am able to get a shot around here, I know I can hold it, confidently hold it to this level. That is why I'm waiting patiently for that shot. Okay. Hopefully I don't miss it. Okay, so that's my expectation. I want to see a run above this high. Maybe it might not go that high. Okay. So I'm looking for a run in above this high and then rejection from there. So that's my expectation for this week. Let's go to GU. So GU now we have relative equal highs there. So now I think that this relative equal high is more likely going to be taken. Okay, so I think this relative equal high, this is an up close candle. So I think a run into this area and then reversal from there would make a lot of sense to me. Okay, into this volume imbalance, we have volume imbalance here as well. So depending on how the market react to the volume imbalance, so that's what I want to see. This is a relative equal high. If market rallies above it, those who are breakout traders would be long. Okay, where would our stop loss, where is our stop loss going to be? Where would they place our stop loss? Here, this low. Okay, so the trend following traders, they already have long positions here. Okay, so this area here would contain an insane amount of buy stops. Okay, so if smart money wants to build short position, where would they build it? They will need to build their positions here. Why? Because if they are building short position, there has to be somebody who is going to take the opposing end of their trade. Okay, and remember that when you are going short, you are selling, right? So when you are selling, somebody must buy. Okay, so all the buy stops here, they want to sell into those buy stop. Okay, so once the market rallies up, it is going to release those buy stop into the market, and then they would now sell into the buy stop. Okay, I hope that is clear. So that is my narration. That is what I have in mind. That is the logic I have in mind. That is why I'm anticipating a reversal here to come and take out this low, because those are long here. Okay, those are long here, their stop loss will be here. Okay, I'm not talking about retail traders, I'm talking about the non-commercials. Okay, the the hedge funds, okay, the non-commercial. So here there will be a lot of sell stops. Okay, so if they go short here, this is where they are most likely going to offload their shorts. Okay, so that is why I still think that this weekly fair value gap is the draw on liquidity, okay, for the next quarter. So this is what I want to see. Okay, this is what I want to say, run above this high and then instant rejection to trade lower. Okay, like I said, nothing in the market, nothing in trading is written in stones. Okay, it could just rally above it and then use this up close candle as breaker, because this is going to be a breaker, right? Price has taken liquidity below this low, rally to close above this high, extend the breakout in time, turn it to support to continue higher. Okay, that is also a possibility, but based on all the other things that I explained, the CO2 report, my analysis on DXY, that is why I think that we would most likely get a fake out and then we'll see a reversal to come and check out this low. So that's my long-term view on GU. Okay, let's go to the 1 hour time frame. Is there anything of interest? So the market is in a buy model. Okay, we have this consolidation, run to support, smart money reversal, low risk buy. So obviously we are going to get a run, some a bit of accumulation here and then run above this high to take out the equal high. It is almost there. Okay, so when now let me tell you something. When the market comes close to an equal high, right, and fails to take out the equal high, like it retraced, it's because they are trying to build more short position here. They want people to go short so that they will place their stop loss here and then eventually they come for it and then reverse. So that is my logic, that is the narrative that I have going into Q2. Um, Obviously, I'm going to provide updates on the Telegram channel all through the week when I see something interesting. I'm going to provide an update on the Telegram channel. If I'm going short, I'm going to provide updates on the Telegram channel. So that is that. If you have questions, feel free to drop it in the comment section, or you can also ask on the Telegram channel. Okay, I'll see you guys in the next video.